908 Devices, ticker MSS, just reported Q2 2026 earnings. Top line beat consensus. Revenue hit $16.1 million, up 23% year over year, beating the $15.22 million estimate. But the bottom line missed badly. EPS came in at negative 32 cents versus the expected negative 15 cents. Guidance. Full year 2026 revenue floor raised to a range of 68 to 70 million.
And the stock reaction is, well, it's the crazy part. Shares surged 13.8% post-earnings, closing at $10.01 on massive volume, over 1.5 million shares traded.
Yeah, that's what, like 5 times the daily average.
Right, which leaves retail investors looking at this report wondering, how does a 100% plus EPS miss trigger a massive rally?
Exactly. So our mission in this deep dive is to dig through our financial notes to understand that disconnect. It's like think of a race car failing its emissions test, meaning the immediate cash burn and GAAP EPS look terrible, but the judges still hand over the trophy anyway.
Yeah, and the reason they get the trophy is because the pit crew successfully swapped out this clunky old engine for a streamlined, high-margin software model mid-race.
Right. And that clunky old engine was their bioprocessing arm, right? The one they divested back in 2025.
Precisely. Wall Street completely forgave this quarter's bottom line miss because they're just laser-focused on the operational leverage created by shedding that dead weight. I mean, by dumping bioprocessing, 908 Devices instantly eliminated the massive R&D and manufacturing overhead associated with it.
Which gives you an immediate mechanical effect on the margins. Adjusted gross margin reached 57%, and the adjusted EBITDA loss was sliced by more than half year over year.
Down to just $1.9 million. Yeah.
But, shedding weight only helps if you actually drive forward. And product revenue is definitely doing the heavy lifting here, jumping 35% to 13 million.
Yeah, driven specifically by strong demand for their VipeIR device, plus the baseline revenue from their recent NIR Lab acquisition. VipeIR is that handheld chemical identifier. It's crucial for first responders dealing with unknown substances on the street.
Oh, right. And NIR Lab adds that AI-powered software layer to those devices.
Exactly, and that product surge completely offset a 10% contraction in their legacy service revenue.
Okay, so the 2025 pivot to a pure-play, handheld safety and defense tech company is actually translating to sales. Management highlighted that U.S. state and local customers now represent over half of total revenue. But I do have to push back here.
Sure, what's the concern?
Well, state and local budgets are notoriously tight. Is that really a reliable engine for growth? Especially considering the company just posted an $11.9 million net loss. Integrating NIR Lab is clearly burning through their cash.
It's a vital point. Japan profitability is definitely a glaring risk here. That $11.9 million net loss is dragged down by stubbornly high operating expenses, immediate integration costs, and contingent consideration charges tied to that NIR Lab buyout.
Right, acquiring new AI tech is just incredibly expensive.
Exactly. But you have to remember that state and local law enforcement are highly motivated buyers right now. Between the fentanyl crisis and complex hazmat threats, this equipment is basically viewed as a daily necessity.
Right, which makes that specific municipal customer base highly resilient despite the tight overall budgets.
Yep. Plus, they secured a new $6 million Protect Hour order, which gives them really solid revenue visibility for the second half of the year.
That helps. But looking closely at the guidance, they explicitly left out the military AVCAD program. That's their contract to build aerosol and vapor chemical agent detectors for the Department of Defense. Why leave a major government defense contract out of the projections entirely?
Pure conservatism, honestly. Defense procurement timelines are notoriously unpredictable. By excluding the AVCAD program from that $68 to $70 million floor, management is setting a baseline they know they can hit with just their state and local buyers.
Oh, I see. So if the military timeline accelerates, it leaves room for significant future upside that simply isn't priced into the current guidance.
Exactly. Which brings us back to the core tension of this entire report. They're growing the top line and expanding their footprint with first responders, but the cash burn from acquiring their new tech is still a pretty heavy anchor.
Right, all comes down to that tech transition. Currently, 31% of their revenue is recurring. So for you listening, the real test is whether the AI-powered NIR Lab subscription will successfully transform 908 Devices from a traditional hardware manufacturer into a high-margin, recurring software play.
And if they pull off that software transition, failing the early emissions test on EPS won't matter at all because they'll be driving a completely different vehicle.
Well said. You'll want to keep a close eye on those software margins going forward. And be sure to follow the show for your daily earnings coverage.